Welcome to Exponential News, your daily dose of what's happening at the edge of the exponential age. We break down the latest in AI, crypto, space, and frontier tech so you don't miss the signal in the noise.
All right, let's just jump right in, because today was one of those days. We're talking about legacy institutions making these historic bets on digital assets, while brand new technology is making us question pretty much everything, from who owns what to the very definition of money itself.
And we're going to kick things off with how crypto is officially breaking out, moving from the fringes, right into the core of our global financial system. Let's start with a number, and it's a big one. $5 trillion. That's what analysts are now projecting for global stablecoin transactions in 2025. I mean, to put that into perspective, that's a 47% leap in just a few short years. It's absolutely massive. So you might be asking, what's behind this huge jump? Well, it's mainstream adoption, plain and simple. You've got giants like Stripe and PayPal pushing this into the everyday. And we're finally seeing some real, solid federal regulations taking shape. But here's the really wild part. The thing happening behind the curtain. Stablecoin issuers have become some of the biggest buyers of U.S. government debt. We're talking $120 billion in treasuries. So they're not just moving money around anymore. They're literally helping to fund the U.S. government and cementing the dollar's place in the digital future. And it's not just the new money tech companies either. We're talking about the oldest, most conservative players getting in the game. Check this out. Harvard's endowment, a pillar of traditional finance for centuries, now holds more Bitcoin in its portfolio than it does gold. More Bitcoin than Google stock. More Bitcoin than Nvidia stock. I mean, when an institution that's been around for almost 400 years makes a pivot like that, it tells you something profound is shifting. And this isn't just a Bitcoin story anymore. Far from it. We're seeing public companies diversify their bets in a big way. Take Upexi, a company on the NASDAQ. They just announced they're holding over 2 million SOL, which is worth around $334 million. That's a huge vote of confidence, and it's helping to establish Solana as a truly institutional-grade asset. Now, here's where things get really interesting, where this institutional trend crashes right into the world of political power. A firm connected to the Trump family is trying to raise $1.5 billion for a digital asset treasury. They're using a NASDAQ-listed shell company, basically copying the playbook that MicroStrategy used for Bitcoin. And they're already well on their way, with over $500 million raised. Now, as the sources point out, this is raising some serious flags about potential conflicts of interest, especially as regulations for this entire industry are being written right now by people who may have a huge personal stake in the outcome. So all this money is moving, but what is it all being built on? That brings us to the foundational tech breakthroughs that are actually making all of this possible. And this is a big one. Scientists over at ETH Zurich just smashed one of the biggest roadblocks in computing history. They hit 92% quantum purity at room temperature. For decades, quantum computers had to be kept in these super expensive, cryogenically frozen chambers, basically locking them away in labs. Getting rid of that barrier, well, it changes everything. It opens the door for affordable, everyday quantum tech in things like medicine, navigation, you name it. At the very same time, AI is putting these ridiculously powerful tools into everybody's hands. There's this new tool from OpenArt. It's gone completely viral. You literally just type a simple idea, pick a style like a vlog or a music video, and a whole suite of over 50 AI models writes, designs, and edits a full video for you. In seconds. It's already got 3 million users. But here's the catch. The tool is being used to generate copyrighted characters, like Pikachu or SpongeBob, even with filters in place. And this is all happening just as companies like Disney and Universal are suing other AI generators for the exact same thing. So that's the big question, right? Is this a revolutionary new tool for creativity, or is it about to set off a legal firestorm over copyright? So you've got this flood of new money. You've got this incredibly powerful, accessible AI, and together, they're forcing us to step back and re-examine the very foundation of the whole system. The very nature of money. Let's zoom out for a minute. There's this fascinating theory gaining a lot of steam that flips how we think about national debt. The core idea is that the real U.S. debt isn't that scary $37 trillion number you see in the headlines. If you take out the money the government owes itself, it's actually closer to $22 trillion. And what do you know? That's almost exactly the same as the M2 money supply. Basically all the cash and checking deposits in the economy.
So if you follow that logic, it means that for the economy to grow, the money supply has to grow, which means debt has to grow. And the scale of this potential growth is just astronomical. Some analysts are now predicting that the total global supply of fiat currency could balloon to $1 quadrillion in the next 20 years.
A quadrillion. It's a number so big your brain can't even really process it. So here's an analogy to help. If you took a quadrillion quarters and stacked them one on top of the other, that stack would stretch nearly 4 billion miles, almost all the way to Pluto. Yeah, to Pluto.
The people who believe this is coming argue that all that new fiat money is going to rush into hard assets to protect its value, and we're already seeing the first signs. But it's not just a Bitcoin story anymore. As you can see here, we're in the middle of a multi-chain awakening. Institutional money is flooding into other crypto ecosystems. We're talking over $1 billion flowing into Solana ETFs, another $1 billion plus into XRP products, and more.
So the real signal here is that the smart money isn't just picking one winner anymore. It's diversifying. It's betting on the entire digital asset space. And when you put it all together, the financial shifts, the tech revolutions, the new economic theories, everything is accelerating at this incredible pace. It really leaves you with one final thought. In an age defined by this kind of rapid change, maybe the biggest risk you can take is to just stand still.
That's it for today's Exponential News. To dive deeper and see how we're building in public, visit exponentialtom.com and join our community.